Hi everyone, I'm Chad Shoup and welcome to my latest edition of Bank It or Tank It. Today we're going to be going over Lockheed Martin, taking a look at their fundamentals, the sentiment, and the technicals to figure out if this is a stock that you want to bank on over the next 12 months or tank because these shares are headed lower. But first, just a big shout out to Dennis. He brought up this company to me, told me to take a look at it for a Bank It or Tank It video early in July. So we're just not getting around to it and featuring it as our Bank It or Tank It stock today. So we're about to dive into everything you need to know about Lockheed Martin. So with Lockheed Martin, before we dive into all the details today, just take a minute, scroll right below the video, click subscribe so that we don't miss out on any of my upcoming videos, my upcoming Bank It or Tank It's, or my quick takes where I run through several stocks in just 5 minutes. And be sure to leave me a comment below. All the stocks that I feature in my quick takes or in my Bank It or Tank It videos are from companies that you all have recommended and left me a comment below here or on Twitter. So be sure to just leave me a comment, let me know what stocks you want me to take a look at, and I'll add them to my list to feature in an upcoming video. Now, Lockheed Martin had earnings a couple of weeks ago where analysts really weren't sure heading into it what to expect because we had the pandemic going on, the government. This is a company that really relies on government contracts, so with a lot of government spending, the stimulus for the economy, maybe they would see a setback in that for their sort of contracts, but they didn't see any issues at all. Instead, their backlog orders are at 150 billion, so they have a lot of contracts that are going to be coming up in the coming years to help keep them afloat regardless of what's going on in the short term. So this is a company that's really cruising higher right now, and analysts were loving the stock. They sent shares higher on the day they announced earnings, but since then they've given back some of that. So we'll take a look at that in the technicals, but first let's dive into some of their key stats to break down how the fundamentals look for Lockheed Martin. The two things we like to look at for their key stats are net income and total revenue. The total revenues are the blue bars on the chart. The net income is the line on the chart. And when we look at the net income, it had a dip in 2017. But other than that, it's just steady climbing from there. Just like their revenue, you see these blue bars just continue to stack higher. And you got to love to see that. There's really no hiccups in terms of their revenue stream. And even with the pandemic, like I said, they just had earnings 2 weeks ago, and they're still seeing a strong backlog, strong demand for their orders. This is a company that makes the F-35 fighter jets. They make other military aircraft, vehicles, and missiles. So they really thrive when there's tension around the globe. And right now that tension's kind of taking a back seat to everything going on with the global pandemic. That's been front and center, and that's a virus that's not a real threat that Lockheed Martin would be able to benefit from. So it's created this uncertain time for Lockheed Martin, and the election is going to be another big uncertain moment because, just like I said, military-driven contracts for this company are great. Having a big budget spend for military is what's going to help continue to lift Lockheed Martin shares. But with the election coming up, we all know that Republicans tend to be more budget-friendly toward the military, and the Democrats tend to pull back some of that budget-friendliness for the military. So when it's all said and done, this is a company that's still going to see contracts with this back order that's going to stay intact. They're going to still have sales continue to come in regardless of who's president. But the psychological, the human behavior, the mindset when we go into this election, this is a company that relies on military contracts. And when we have the election, this stock, I think it might be on hold for a little bit because they're trying to figure out who's going to win the election and what that's going to mean for the company, even if it's just a short-term impact. Long-term, this is a company that's still going to thrive. But in the short term, whoever wins that election can really create shockwaves in the stock market, and a stock like Lockheed Martin could really get caught up in some of those headwinds. So their total revenues, net income look great, steady climbing, but that election, that moment right there could be what kind of shifts the short-term narrative for the stock. So we'll be paying close attention to that for Lockheed Martin. Now when we take a look at their quick comps, some of their competitors, let's see how they stack up. So a few of the companies we have in here are Boeing, which is really falling behind now. They're listed at a market cap of $96 billion, but with everything they have going on, that's going to be continuing to get trimmed. Lockheed Martin is the largest company on the list here. Like I said, it's a giant stock, $108 billion, and some of their competitors, General Dynamics, Raytheon, Northrop Grumman, these are all companies that compete for some military contracts in some of the areas that Lockheed Martin is operating in. And when we look at the short interest, this is as a percent of shares outstanding. It just gives us an idea of how many investors are out there looking to sell this company short. That means they're expecting the shares to go down. So Lockheed Martin, just 0.9% of their shares outstanding. It's a very small portion. The average for these companies is 2.7%. And you can see some of their more direct competitors with Northrop, Raytheon, and General Dynamics. they're all at 1% or less. So Lockheed Martin just stays in that ballpark, and it's really nothing alarming there. When you look at the price to earnings ratio, they're at 16.9 times earnings. The average for these companies is 48 times, but when you look at Raytheon, it's definitely having an impact on that average at 271 times earnings. And this is probably just due to a quarter where they had a low earnings profit. When investors see that kind of one-off item, they want to adjust the stock price right away because they expect it to be made up in the coming quarters. So it'll have this high price to earnings ratio for now, but it'll come back down when they report earnings. So that'll help even the average out for these companies. But still, when you look across the board, Northrop Grumman 23.5 times earnings, and Boeing is not showing earnings at the moment because they're at a loss after everything they've been having to go through. And then these other companies, 26.3, 26.9, 33.4. So Lockheed Martin is still right in the mix, 16.9 times earnings. And the main thing we're looking at here is to figure out if they're overvalued compared to their peers, their competitors. And they're not. They're right here in line with everything. So nothing alarming when we took a look at short interest and price to earnings ratio. Now we'll flip over and take a look at the revenue growth in net income over the last 3 years, the compound average annual growth rate. And for Lockheed Martin, it's 8.6% for the revenues and 7.95% for the net income. So those are very consistent and steady growth rates. And it goes back to that chart that we looked at with their key revenues and net income. It's had steady growth, and that's going to help it stand out. When we look at the average here, 7.1% for revenue. So Lockheed Martin is growing faster than many of their competitors. And then net income is negative on the average. So Lockheed Martin is definitely figuring out a way to help generate positive earnings growth. And we know from their expectations on the net income, total revenues over the next 3 years, that these growth rates are expected to continue in the foreseeable future. And a lot of that has to do with their huge backlog that they've built up. So this is a company that's staying ahead of the competition when it comes to their revenues and net income, and they have a dividend yield to go along with it. And at 2.5%, they're below General Dynamics at 3%, Raytheon Technology 3.1%. It shows that Lockheed Martin is one of the ideal plays in this sector because they have those growth rates, they have the revenues. Now, I always like to take a look at their estimates from the analyst community, and this is from S&P Capital IQ, but they take the average analyst recommendation out of 20 analysts that cover the stock, and they have it rated as an outperform, 1.95 on a scale with a 1 being a very strong buy, a 5 being the very strong sell. So the analyst community is extremely bullish on the stock, and this is a sentiment reading to see how the investment community feels about the company, what they're telling their clients, and they're screaming that it's a buy right now. Now, before we get into the price chart, I'm going to talk about a lot of short-term trends, and they may seem a bit overwhelming, but if you want to learn more about how to capitalize on these short-term price moves where the stock may only move a few percent, but you're looking to capitalize on that move because you know you can see it coming and you want to take advantage of it, then be sure to click on the little eye at the top of the screen on the video or scroll below it, and in the information section below the video we'll have a link that'll take you to a page that'll tell you all about my favorite way to trade options. So be sure to scroll below and check that out, or just click the iCard, the little I information button that pops up on the top right hand of the screen throughout the video. Just hover over that, click on it, and it'll tell you more about my favorite way to trade these short-term price moves in the stock market. Now let's dive into our price chart for Lockheed Martin today. So here's our price chart of Lockheed Martin that I already have everything that I want to cover pulled up. So we're just going to take a look at this chart, walking you through what we've seen since 2018. So this is a downtrend that the stock was stuck in from 2018 to early 2019. And then they started to make a massive rally out of that. And they broke out of their downtrend. This was a key resistance line for that downtrend. They broke out of it and they continued to climb higher, and they reached a peak right before the coronavirus economic lockdown in February. They peaked at around $440 a share. Now these dotted lines are what we're going to highlight today. So the rally that we've seen and then the crash during the pandemic created this extremely wide uptrend from this solid green support line that goes up to around $280 a share to this solid red resistance line across the top that's up here at the 400s per share. Now these dotted line, these dashes though, that we see on the chart, these are what we're going to focus on today because these are what's called a triangle pattern in the technical analyst community. So these are patterns that I study a lot, and one of the key things that I like about them, I write about them for Investopedia quite a bit, and I post those to my Twitter account. So if you follow me, then you probably are already pretty familiar with what these patterns look like and mean. But the point is that once these patterns form, they're periods of consolidation for the stock, and that's uncertainty about which way the stock should ultimately be heading. So when they're starting to form, this one we can see the low was around $360 a share, then it hit a resistance around 400, and then just kind of bounced around in that range for a couple of months. And during this period, it's hard to figure out if people are accumulating more shares or if people are using the opportunity to sell off. But once the breakout occurs, then it gives you a clear idea of what to expect from the stock after that. So in this case, we saw the stock break out higher. And then I could have told you that it was going to continue to climb to $440 a share. At least that would have been my expected price move for the stock. And it's because when you take these triangle patterns, you take the height of the pattern, so $400 down to $360, so that's a $40 difference. That's the expected price move that you would see on the breakout. So in this case, it was higher, it hit $440 almost to a T, and then crashed. And now whatever happens after that is really just depending on the market at the time, and this was the pandemic, so it caused the stock to crash way down, but then it rebounded sharply, and now we're stuck in another triangle pattern kind of bouncing around here. And that creates a lot of uncertainty again. The investors not really sure what to do with this. You don't know if people are accumulating more shares for another massive breakout or if it's about to break lower and continue to fall back down to this green support line near the bottom. And that's kind of my key levels to watch today. These dashed lines right here are going to be the key resistance in the key support lines, because when we look at these triangle patterns, trying to play the guessing game and jump in before the breakout occurs is extremely difficult. Even though these patterns tend to be bullish patterns and send stocks higher, they don't always do that, and they're even harder to backtest and to find, because you could always throw out certain triangle patterns for whatever reason and kind of leave them off of your radar, because it's really just what you catch with your own two eyes that really help these stand out. So there's a lot of risk built in to trying to take the trade now and bet on which way it's going to break out. So I like to wait, let the breakout happen, and then I know the expected move. So in this case, if we're looking at $400 a share being around the top of the pattern, and then all the way down to $275, $280 as the bottom of the pattern, let's just call it a $100 height for the pattern here. That's a $100 price move for the stock. So at the higher end, once we get a breakout, it's headed to above $500 a share. And on the lower end, if it breaks out below this green support line, then it's going to continue to head lower and fall about $100, which would take it to this longer term green support line, which is the major support that we want to keep in our mind. And one of the biggest things here to take away from this stock is that it could fall all the way to this support line down to around $280, $290 a share and still be in an uptrend. Now it's a massive drop and it looks very steep, but as long as they make a high above this previous low, they already had, this is the main low that they had back in late 2018, early 2019, and then they crashed again, but turn around higher than that. So this was a higher high from the previous peak to that peak. This is a higher low, so that's a bullish sign for the stock to stay in an uptrend. So this is a stock that we're going to have on our Bankit list today, and we ran through the fundamentals. The net income and total revenues were in steady growth, so that was a bullish opportunity for the stock. And for the sentiment reading, while the analyst community was extremely bullish, another sentiment reading I use is on the chart, the 200-day moving average, and right now it's just trending sideways, and the stock's actually trading right around it. So the sentiment reading is not a very clear indicator of where we would like to see the stock heading at the moment. But when we looked at this price chart, the overall trend is to the upside. We don't want to take a trade here in this triangle pattern. We want to see the breakout, but I'm bullish on the stock, so I'm going to put it on my Bankit list for today. And for my price target, like I said, if it gets the bullish breakout to the upside of this, we're going to be looking at a stock that's heading north of $500 a share. So let's call it a 12-month price target of $510. That's about $100 added to the top of this breakout that we would expect to see Lockheed Martin head over the next 12 months. So that's about a 35% price move to the upside. But we're stuck in the triangle pattern now. It's not going to be a straight shot higher. It could be stuck in this pattern, like I said, until the election, until we get some clarity, something that can really move the stock, some momentum to help it break out to the upside. And until then, just expect to continue to see the ups and downs and follow those key levels on the chart. Resistance line and the key support, the dotted lines on the chart, are going to be the key levels to watch in the short term. Once we get the breakout, then we know how we want to trade Lockheed Martin. So that's all for my video today. Don't forget to scroll below, click subscribe, and if you enjoyed it, hit the like button. And as always, leave me a comment. Let me know what stocks you want me to feature in my upcoming bank it or tank it videos. This one was from Dennis, but they could be yours in my next feature video. So just leave me a comment below and I'll add them to my list to feature in an upcoming bank it or tank it video. Until next time, I'm Chad Shoup.